Hi, and welcome to the Stockscores Market Minutes for June 25th, 2012. This week's topic, finding the hot market. You know, the easiest way to make money in any market is to play that area which is hot. And so within the stock market, there will always be those sectors which are leading the market and doing the best. By doing a Stockscores market scan on a daily basis, you can find the stocks that are up each day and look for themes by looking at the company name and see if there are others in the industry doing well. You'll find that when a market is hot, other stocks in the sector will be hot as well. We can use the Stockscores market scan to find them. Let's do that now, jumping over to the Stockscores market scan tool. There are a number of ways that you can do this, but let's just play around with it a little bit and I'll show you some of the different things that I do. We could start off by saying, show me all Canadian stocks that had a gain today of greater than 5%. So I've used the gain loss tool here, greater than 5% over the last 1 day, and did so with at least 250 trades a day. I can then run the report and see that there were a number of mining stocks in there. Also, the VIX was hot today. So I can see that one of the areas that was strong was in the gold sector. However, if I look at the charts, I might get a little bit different picture. So I'll usually take a quick look at some of the charts. And so, for example, here is a stock in the mining sector that was up, but really into a bearish trend. Here again, a stock that was up into a bearish trend. And that's not really what I want. I want those stocks that are really beating the market. So let's go back to the market scan and do it a little bit different way. This time we'll do it on the US market just to change it up. So we'll say all American stocks that had an abnormal day to the upside. So rather than use a gain loss of greater than a certain amount, we're going to use the abnormal day up. The difference there is that these stocks are up more than you would expect for that stock, because a 5% gain for a $2 stock is very different than a 5% gain for a $20 stock. And so by doing the abnormal activity up scan, we can find stocks that are specifically trading more or up more than you would expect for that type of stock. So I've also set a number of trades of 1,000, click on market scan report, and it found 21 stocks that fall into that group. And again, I can go through some of these stocks and look for stocks that were gaining. And what you want to try to do is look for stocks that are in trends that have positive stock scores, sentiment stock score greater than 60, that sort of thing. Now that's another way that we can scan for the strong sector. If I do a market scan here and I say show me all the stocks that have a sentiment stock score of greater than 60 that are fairly liquid, number of trades greater than 1,000, and this time let's do gain loss of greater than 10%, but instead of over the last 1 day, let's do it over the last 10 days. So now we can see stocks that have been moving a little bit more in the last little while and have good stock scores indicators. So I've got this time 78 stocks. Now again, we're going to look through the charts and look for themes among those names. So as I cycle through these here, I see a technology stock. Now I don't know all of these. Here I see a pharmaceutical stock. Here I see a pharmaceutical stock. There's a shipping stock. Here's a pharmaceutical biotech stock. Here's a biotech stock. So now we're starting to get a sense of where the market is focused on. Here's another pharmaceutical stock. So it seems to me just by doing this scan that I'm starting to get a sense that the hot market is biotechnology and pharma. Here's another biopharma stock. Now if you ever wonder what a stock does in the terms of its business, you can actually pull up the sector of the stock by going into the charting section. Let me show you that here. If I go back up to there and just, for example, punch in Microsoft, click on enter, and then go down to the sector tab, it shows me that Microsoft is in the software index. And so that's a way to get a sense of where those stocks are coming from. Now again, this is something that I do every day. It's a way to see where the money was flowing. You'll see certain days where certain sectors were very strong, and then the next day they might reverse. But you start to get a sense, if you see the same kinds of names coming up over and over again, that that is a hot sector of the market. All right, let's get into the analysis now. Starting us off, here is a chart of the S&P 500, which was really testing that top of that downward channel and actually broke through the downward channel at the beginning of last week. The market was speculating that there was going to be some more quantitative easing, or at least an indication by the US Fed that that was going to happen. Well, the Fed didn't do that. On Wednesday they came out with a sense that they wanted to help the economy, but that they weren't about to print more money necessarily right away. And that's what caused that big down day on Wednesday, or pardon me, on Thursday after the announcement. Wednesday was the announcement. Thursday is when the market really sold off. And that took us back into this downward sloping channel. So therefore, we must remain bearish. Now, it's encouraging that the market was able to break that channel, but the fact that it failed means that we haven't got that signal yet that sentiment is truly turning around, and we must continue to be patient for a turnaround. The TSX, very similar situation. Market broke through the top of its channel but failed to hold those gains, and we find ourselves back into that downward sloping bearish channel, and therefore we should remain negative on Canadian stocks. On the VIX, we have fear generally going down over the last month or so, but we are at support where there is probably a likelihood that the VIX index will bounce here. Generally, though, it's a good sign for the stock market because the trend in fear is down, and we are really back into that sideways trading action in a relatively narrow range. That means that the market isn't necessarily concerned about some catastrophic event that would upset the whole world's economy. Instead, the market's more focused on what it should be focused on, which is corporate earnings and that sort of thing. Here's a chart of the 20-year bond, and this is an important chart because if we get a break of this upward trend, it means that money is coming out of risk-free assets, that being treasuries, and coming back into riskier assets, things like stocks and commodities. We don't really see the break of the upward trend line. Again, the market's been trying to break the upward trend line on the treasury bonds, but we haven't got that solid breakdown. So this is really a bearish chart for the stock market, but it's right at that point where it could change at any time, and so I don't think we should take our eyes off of it. US dollar chart surged in the last few days, likely because the Fed decided that it wasn't going to be printing more money, so that's good for the US dollar. It's bad for stocks, bad for commodities, but we're now at the downward trend line, and I suspect that we're going to see the US dollar roll over a little bit here and start to drift lower. That would be a positive for stocks and might give stocks a little bit of support in the short term. Gold is in a bearish pattern, has been for some time. I suggest staying clear of this market because it's just not a place to be right now. There are still a lot of gold bugs out there who think that gold can surge higher, but certainly the chart doesn't support that. And until that downward trend line is broken, that's the red line on the chart, you should stay clear of gold. Oil is really in a tough bearish trend, sign that the global economy is slowing. Pretty oversold, due for a bounce, but until there is a break of that downward trend line, I wouldn't be optimistic about oil, and I would really be pessimistic about the global economy until you can see oil turn around. So that turnaround could happen any day, but until that red line is broken, don't get too optimistic about the world. All right, so my outlook then on US stocks, Canadian stocks is both bearish. Gold, I'm bearish. I think gold probably doesn't go a whole lot lower. It just sort of drifts down, maybe sideways in the next little while. Oil is oversold and due for a bounce back. But really what's happened is the market tried to reverse early last week, but failed. And that's really likely because the US Fed did not give the market what it was looking for in terms of some idea that there was going to be more quantitative easing down the road. Stocks are oversold in the short term. They should bounce back in the near term, but in general, until those downward trend lines are broken, we should remain pessimistic. Well, that has been the Stockscores Market Minutes for June 25th, 2012. Have a great week in the market and trade well.